How's everyone? Welcome back to the channel. In this video, we are doing a deep dive into turnover tax. I did mention in the previous video that there are structures that you can use to pay less tax, and turnover tax is one of the first ones to do that. So what is turnover tax? Turnover tax was introduced by SARS and Treasury for small businesses in order to simplify their tax obligations. One of the cool things about turnover tax is that there are less bookkeeping and financial record keeping requirements from a tax perspective, and the tax is also worked on turnover rather than profit. And turnover means the same thing as revenue, so yeah, it means the same thing. But it's only for small businesses that's doing less than $1 million in turnover or revenue. And the taxes are only 0 to 3%. So now we're going to go over the pros of being registered for turnover tax. If you're registered for turnover tax, the first thing or the biggest pro it has is that the tax is really low. I mean, if you're doing about 900,000 in revenue, you're only paying about 14,000 Rand in tax, compared to individual tax you would be paying close to 250,000 on that level of income. So it's a very, very, very good tax saving for companies and individuals that's registered for it. And the second pro that it has is that, again, I did mention this, that the record keeping is much less. So you don't need to keep crazy financial records in order to comply to turnover tax. So those are the main two pros of being registered for turnover tax. The cons, however, is quite terrible. I'm going to be honest. It was introduced in the Income Tax Act almost 12 or 13 years ago, and it has never been changed since it was introduced. So that's the first thing. Like, SARS and Treasury has basically forgotten about that turnover tax exists. The second thing is that the registration is manual. The submission of turnover tax returns is also manual, and the actual assessments and process of getting an assessment for turnover tax is also manual. So you can imagine all these manual processes, and SARS wants to be this fourth industrial revolution system where everything's online, but turnover tax is not. It also creates a scenario where you can't get a quick tax clearance certificate and get your assessment as soon as possible in order to be compliant. And so it can result in a company being non-compliant and not being able to do proper business because turnover tax is just really, really slow. So sometimes, in some scenarios, the cons actually outweighs the pros. I mean, you could lose a lot of business by being non-compliant. So those are basically the pros and cons. Who is turnover tax for? I would say turnover tax is great if you're a freelancer, you're a creator, you have a business and you don't really have staff, or it's not something that's going to grow beyond $1 million in income, and there's only certain types of companies that can qualify for it. The shareholders of the company must be individual shareholders, and there are certain industries that can't register for turnover tax. Industries such as the medical, so doctors, lawyers, accountants, actuaries, architects, veterinarians, consultants, all those types of services cannot register for turnover tax. And turnover tax was basically built for people who are either in the creative industry or in the product industry, not really working with, like I said, doctors, engineers, accountants, and all that. So that is turnover tax. It's a great way to save on taxes, but it's still this awful manual process that hasn't been changed since it's been implemented. And yeah, so that's turnover tax. If you like this video, you can click here to watch another one. Otherwise, you can consider subscribing, and also watch out for the second video, which will be about small business corporations.